Yes, sir. We are back with another episode. I'm just trying to make sure the time is right because I got a little meeting I'll hop on after this. So just had to make sure the timing is right. But we back with another episode, man. You know what the deal is. We wrapped up January for the market. It was the last day of January. Whoo, that was a crazy volatile month. That volatility is starting to come down though. So that's some good signs. And we're going to talk about the market. But before we get into all that, please subscribe to the channel. Like this episode. I'm going to get into it. Let me make sure I got my water handy dandy. All right. So that was a crazy month for the market. That was a crazy month. We had Microsoft and Apple release their earnings last week. And strong earnings there. Strong earnings. Microsoft gave some good guidance in terms of the cloud, what they see going on with the cloud in the future moving forward. They had some strong revenue growth. I'm really looking into their gaming segment because I think they have huge opportunity to grow there. And also the LinkedIn. LinkedIn is going to be huge because LinkedIn is still getting adopted widely in the workforce today. I think LinkedIn revenue is going to continue to drive Microsoft revenue higher and higher. I don't think it's talked about as much as cloud, even though cloud has a huge opportunity as well with Azure. But I think personally the gaming segment, especially with the acquisition of Activision, I think the gaming segment is going to continue to take Microsoft to higher levels. In my personal opinion, you got the subscriptions that they got with the Game Pass, Microsoft Teams, of course, they have revenue there. And then LinkedIn, like I said, I think those are really going to be the main things that drive Microsoft forward, aside from Azure, even though Azure is the most talked about, highly anticipated segment in terms of Microsoft. But you saw some good growth. Their earnings was pretty strong. And then, of course, Apple's growth was pretty strong. Every segment that they had, including services, iPhone, Macs, did better than expected, except for iPad. And iPad was continued to be supply constraints, so that's a reason why iPad didn't really get to the numbers that they wanted them to get to. But other than that, strong growth across the board, strong forecasts, really good earnings from both of them. Of course, Tesla had great earnings as well. And then this week you got Amazon, Facebook, and Google. I'm not too sure what to expect from them, honestly. We coming off a holiday quarter, so I would assume Amazon has pretty strong earnings, and I'm not really too sure what to expect on Google and Facebook. I'm kind of just waiting those on the sideline. But Amazon, I'm pretty sure they should have a good quarter, but at the same time, we never know. It depends how those holiday sales was looking, and how we were looking in the holiday season. But let's see. We can wait and see. This is all going to be a factor in terms of how the sentiment is going to be for these next couple of months, because February and March, they not no they ain't no good months for the market. We closed bullish these last couple of days, which is a good sign. It's always a good sign when you close pretty strong, because that's basically investors are saying that they're willing to hold those positions overnight. Basically saying that they're confident in the positions that they hold and they continue to hold them over time. So it's always good when we close bullish, when the market closes higher. That's always a good sign. Investors are always optimistic of what's going on in their positions and why they taking them overnight. So that's a good sign. But with this market, man, it was been volatile January. That volatility is starting to come down. Once it comes down and puts become cheaper, definitely I'll be looking to get some more puts. I'm kind of mad at myself, but it's all learning process, because I bought some puts early January. If you could go back to those videos and watch them, and I sold them early. They hit my profit target, but I just sold myself too short. My profit target was way too short. So I'm gonna be analyzing to see what I could have done better, how I can make better exits out of my positions to get more profit, stop leaving so much money on the table. Because one thing that I'm watching that a lot of people are not talking about, and I'm telling you, I've been saying it, that a recession might be not a recession, a stock market crash might be on the way. You can go back and watch them previous videos. I don't know when. It could be this year, it could be next year, but I feel like it's going to be within the next 2 years, definitely. I don't know if it's going to be 2022 or 2023, but it's going to be one of those years. And I'm saying that because that yield curve that I talked about in those videos is starting to invert. Short-term interest rates are starting to rise higher than long-term interest rates. The 2-year treasury yield is starting to rise higher than the 10-year. It's about 0.61 basis points away from happening. And remember, in like March of 2021, it was at like 1.63, and we came all the way down to 0.61. So that's showing us that 2-year is starting to rise higher than 10-year. And that's all the bond market is basically saying, that they expect a rise in short-term interest rates, which, I mean, could predict the stock market crash. Now, I'm hoping we have a lot more bullish days so these puts can become cheap, so I can afford some puts to play to the downside and protect my portfolio. And that's how I'll cash out in a stock market crash. You can make money both ways. Remember that. Stock market going up, you make money. Stock market go down, you can make money. That's what puts are for. So I'm watching that. And a lot of investors are not talking about that. A lot of people are not talking about that. I don't know if they don't want people to know or if they don't see it, but a lot of people are not talking about this inverted yield curve that's starting to invert. And it's coming down fast too. Fast. It's kind of scary how fast it's coming down, but I mean, we're going to see. We're going to see what's happening, because you have some data that's pointing us towards we coming out of recession. Some data showing us that we might be going back into a recession, but I'm not really worried about the recession if it's happening. I'm worried about this stock market crash and how I can make money by purchasing these puts. So we're going to see what happens. I'm going to keep reading this indicator that I've been talking about for the past, couple months now. But, and I'll back to Microsoft on another note. I actually wanted to talk about the acquisition of Nuance that's supposed to close March this year, I believe. And if you don't know the company Nuance, they're basically an artificial intelligence company that's in the healthcare sector. And Microsoft acquired them. And it's supposed to close sometime this year in March. And a lot of people aren't talking about that, because once Microsoft steps into the healthcare sector, that can always also be a boost in terms of their revenue. That could be another boost in terms of their revenue. Now remember, they got Activision closing next year. If Nuance closes this year, Microsoft is just going to dominate. Microsoft is going to dominate. Them and Apple, two strongest stocks in the stock market, in my opinion. So much revenue coming from across so many different segments, services, products. It's unstoppable. It's unstoppable. So if that closes, they getting it. I think the UK is investigating that acquisition right now to make sure it's not going against no anti-competitive, antitrust laws. But if Microsoft ends up closing Nuance, which a lot of people I think forgot about, that might be a $400 stock. That might be a $400 stock. And talking about the recession and stuff, I feel like with me, a lot of the things that I fear are, a recession, a crash, like the constant narrative that they push. And if you an investor as well, I'm pretty sure that's on the back of your mind. But I'm just been lately. I just been like, man, why am I scared to fail? Why am I scared to face rejection or whatever, man? Like, get over all that, man. Put your money into the market. Take risk. What's a life without a risk? That's a life that don't exist. Take risks, man. Put your money in there. The stock market always bounces back from a crash. So that's just show you that first, you got to be long-term investing. And second, stop letting these news outlets and media outlets put fear into us, talking about stock market crash when they buying on these dips and all that. Put your money into the market and don't look back. I'm here to build wealth. Long-term investing is where it's at. And that's what I got for this week. I know I had to keep it short because I do have a meeting soon, so I apologize for the sweet and short video, but I hope you enjoyed it. I hope you got some nice information out of it. Slide on me one time by subscribing to the channel, like this video, and tap in with your boy.